What is up guys, Taki here, and today I wanted to discuss the relationship between the price of Bitcoin and Ethereum Mainnet gas fees. So if you like the content, please like and subscribe, leave a comment in the comment section below. Link to the premium Discord is in the description as well. So let's get right into it. So despite the price of Bitcoin being at new yearly highs, it hasn't stopped, the downward trend of Ethereum Mainnet gas fees. It's actually sad if you kind of think about it. Like despite Bitcoin going higher, no one is really using the chain. And if you kind of zoom out in the past 300-ish days, you kind of get to see this trend where the Ethereum Mainnet gas fees is in inflationary territory, right? Where the issuance of Ether is exceeded by, or the issuance of Ether is more than the amount being burned, and we're basically back to levels that we saw in December of last year. And if you kind of look at the price, I mean, December of last year we were trading at like 16, 17K. Like, why is no one using the chain? So I thought it would be interesting to do like a little bit of like an overlay. So basically, taking this and overlaying it with the Bitcoin price to see if we can kind of see any relationship between these two metrics. So one thing, or the first thing I'll talk about is like, whenever the price of Bitcoin, or like whenever the price of like crypto goes down, you kind of see like this one-off, increasing gas fees, because people are, trying to sell stuff, and they're trying to like save their positions from being liquidated, and the fear of loss is usually greater than, I guess, like the, like the fear of making money or something, right? Because people tend to be risk averse, and obviously, right, when price goes down, people become more sad, and people aren't really incentivized to use like the chain, especially with like the higher risks associated with on-chain activity. But I think it's kind of interesting to kind of draw a line here and kind of look at how mainnet gas fees react when Bitcoin just puts in these like visibly large green dildos, right? I think that's more interesting because, right, like we just had a really big green dildo, and there's like no activity, and this has been the case in other like large candles, like in like mid-March, right? There was like not that much activity here, and also in early January, right? We had Bitcoin, Ether, like Lido goes up, or like the liquid staking derivatives went up, but nothing really happened, and I think the reason for this is when when Bitcoin goes up, I think it typically catches people by surprise. And people, I feel like the first thing people do is they go to centralized exchanges and then they buy like whatever coins that they can, right? Either spot or on leverage, right? Like the first thing people do, like they don't like, just bridge USDC from their bank to Coinbase and then bridge that to like MetaMask. That's typically like not what people do. And you can kind of see that there's like usually like a lagged effect, right? Where the price of Bitcoin goes up, and then the price of Bitcoin goes sideways, and then people start to use the chain more. Of course, like this spike here, right, was led by the USDC DPEG situation, but this is like more pronounced here, where like Bitcoin goes up, then it kind of goes sideways, and then like that's when on-chain activity like really goes crazy. And of course, this was unsustainable because it was led by meme coins such as Pepe. I know people like this. I'm not like super against meme coins and whatever, but like this thing peaked at on May 5th. That was like also like when on-chain activity peaked. Obviously like not sustainable. So basically, like I do predict that in the next couple of weeks to couple of months, we're gonna slowly see more and more on-chain activity as people kind of see like a risk-on signal, and more on-chain stuff becomes more interesting again. I will say that like this Christmas tree pattern where like people like crypto influencers like make meme coins and promote it, that's not like healthy, right? It's not something I want to see. I think for me personally, as like a DeFi maxi, like on-chain maxi, I wanted to see sustained on-chain activity, led by people actually using it for for economic reasons. So for example, like right now, like we're in the inflationary stage, but like why can't we like just go to like 50 and it's like just kind of go sideways from here, right? And like it can look like the heartbeat pattern where like maybe some NFT mint happens, maybe like some meme coins go crazy, or someone gets liquidated and something like this happens. I think this is more ideal than like this Christmas tree pattern. And I think as we get further and further along in this recovery year, which I believe we're in, I think we're gonna start to see more signs of life on chain, or at least I hope so. And I guess we can also do the same exercise for Ether. I'm not gonna spend too much time on this because it's really similar, right? There's like not that much difference. And I guess like Ether has been putting in like higher highs and higher lows typically, or just like higher lows in general. And Ether isn't at its local, it's like yearly highs that is set back in April. But I think if Bitcoin can maintain its strength, I think there's reasons to believe that Ether can put in new yearly highs. So obviously the strength in Ether, the strength in the markets, strength in Bitcoin maybe is attributed to the Blackrock ETF news. And of course, I'm not gonna share anything that you don't already know, but people are bullish because, hey, like BlackRock must know something, like they're not gonna file if they don't, like if they know they're not gonna be approved. They have a 575 to 1 record, and the only time they took an L was for this non-transparent ETF. Which like makes no sense, or which kind of makes sense. And the SEC is literally approving like 2x Bitcoin ETF futures ETFs, which makes no sense, right? Like literally, I think there was like a study done on this where like the Bitcoin futures ETF, like the BITO ticker, it's not backed by physical Bitcoin, so like the fees alone makes it like underperform Bitcoin by like 20% or something. Because like they have to like rebalance and stuff. It's not really a retail friendly product, and if Gary Gensler is trying to protect retail investors, like why not create something, right? And I just wanted to share this clip because I think listening to Larry Fink, right, BlackRock CEO, kind of gives you like a better insight on how TradFi and how legacy players think about crypto. So let me just play this clip for like a minute, and then I'll get back to you on the other side. And then we can discuss it more like going forward.
Back now, FTX created it. Its failure was it's creating its own token. It was not a DeFi. It wasn't a ledger that was open to the world. It was a closed ledger.
Right.
It was not distributed. So the whole foundation of what crypto is, it's supposed to be a distributed ledger that is across the system. I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in an ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem. You don't need trust.
Yeah, so I mean, I'm not gonna spend too much time on this because you can watch it by yourself. But this was like November of last year, or like right after FTX collapsed. And that was like when sentiment was at its worst, right? But he still seems to be thinking about public blockchains and like DeFi, tokenization of securities in a positive manner. And it definitely sounds like, this guy like knows that he's going to get like a Bitcoin ETF at some point, because he talked about how ETFs changing like the way people invest and get allow people to like get exposure to various markets. And I guess like also the bull case is like the last time like the gold ETF got approved, right? It led to like this parabolic run in gold. Of course, right? Like you can't. It's like apples to oranges. But the bull case is, hey, like if like maybe gold went up because financial advisors started to recommend like a 1 to 2% exposure in gold, right? For like portfolio construction. And maybe in 2024, 2025, financial advisors are going to say, hey, like digital gold, put 1% of it in here, right? Like the Zoomers love this stuff, right? Yeah. So like maybe like that's how, like maybe that it's as simple as that, right? Like maybe like that's like what catalyzes the next bull market or like the recovery year, because people say market manipulation or whatever, but like if you're bullish on crypto, like you knew that the institutionalization of crypto assets was gonna come regardless, right? But I think just like all these legacy players applying for these Bitcoin ETFs kind of speeds up the timeline. And I guess like maybe 2 months ago, Bitcoin ETFs, maybe it was like a later in the decade, like 2026 story, but now people are forced to think, okay, like maybe it's going to be a 2024 story. And hey, like the Bitcoin halving is going to be less than a year, and the average approval time for an ETF is like roughly 6 months. So like maybe BlackRock is literally just trying to get this product out like by like early 2024, just in time for the Bitcoin halving, and then like that can actually be like a strong tailwind for the entire crypto markets. I guess like the bear case is, Eric Balchunas. He's like an ETF expert. He still thinks that like despite BlackRock's strong track record, he still puts like the likelihood of this being approved by like a 50% chance, which is like much better than before, right? Because like back then it was like 0% chance. I mean, like it's impossible to know. And I guess, maybe like the prices for crypto assets are doing well right now. But if you kind of think about like the average approval time, it takes like roughly 6 months. And like, literally like the SEC has rejected so many Bitcoin ETFs in the past. So this narrative, right, this Bitcoin only narrative might be like a buy the rumor event, sell the news. And if this does take like 6 months, then people aren't going to be talking about this Bitcoin ETF for like the next 6 months, right? It's like a hot narrative right now, but come August, right? Like, are people still going to be like talking about it, right? Probably not. I mean, either way, I still think that it's going to be a positive tailwind for markets. I'm operating under the assumption that it's going to be approved, just because I'm just optimistic by nature, and I think the market effect, like the direct effect of this, is going to lead to, it's like twofold. So first of all, let's think about the psychology of like the bulls and the bears. So from like a bullish perspective, right? Let's say you already own coins, and before the news, like maybe, you want to de-risk, and then maybe your plan was to start selling coins between 30 and 40K, right? Because this might be a dead cat bounce or whatever. But like maybe now it's like, oh, like, maybe if the ETF is going to be approved, then maybe it makes sense to hold like my coins until, like at least into the halving, right? And then maybe sell the news there, right? So it kind of strengthens the hands of like the bullishly positioned market participants. Obviously, like not all, but on average, I think it kind of extends the time horizon for like the bulls. And like let's now think about the psychology of the bears. Maybe, right, like before this, right, people were fearing a recession, calling for like new lows. And like maybe they were like wanting to like buy the dip at like 20K or something. But given the news, maybe bears become more forward looking, and they say to themselves, you know what, like I'm bullish crypto, I want to buy at lower prices, but instead of buying Bitcoin at 20K and 22K, maybe I'll be happy just like buying it like roughly in this area, like 24 to 26K. And I think ultimately it's going to lead to shallower dips on average, and just improved sentiment in general, which I think is a reason to be constructive to markets, and also like a reason why I'm constructive to markets. Another hot topic that is on everyone's radar is the Bitcoin dominance. Obviously, the Bitcoin ETF, very strong narrative, and Bitcoin dominance has been just going up and up and up all year. I drew this box at the beginning of the year, and if you've been following me, I've said that I hold a bunch of LP tokens, whether it be GLP, Try Crypto, other LP tokens, and I said that once Bitcoin dominance enters this range, I'm going to take my LP tokens and then just convert it fully into Ether. Because LP tokens like Try Crypto can be a way to hedge against Bitcoin dominance, even if you're like an Ethereum maxi. And of course, I kind of pulled out of my LPs maybe like when Bitcoin dominance was like 48%-ish, because I pulled it out. I bought some GMX, I bought some Ether, and like I don't really mind, because like to be honest, like in the Bitcoin dominance in like 5 to 10 years, it's going to be like a boomer metric, right? Like no one's really going to care about it. Of course, it has a lot of cultural significance right now, which is like why people talk about it. But I think, Bitcoin dominance is going to be like in a structural secular bear market, right? As more and more crypto applications, tokens have more value, right? Etc. So I still think that, generally like the upper range of Bitcoin dominance is going to be roughly 50 to 55%. Of course, it can go. I mean, I could be wrong on this, right? I'm like more positive on like DeFi and altcoins than like the average crypto market participant. So I am biased in that sense. But like I mean, yeah, like totally, like the narrative is very strong around like against altcoins, right? Altcoins are gonna get wrecked, and that has been happening, right, on average. And I will talk about, I guess, perps coins, because I guess I think people want me to talk about it. But before I talk about that, I do want to share this chart. Like this chart is very painful, but this is an equation, right? So it's total 3 minus USDC and minus USDT. So total 3 is total altcoin market cap, so it doesn't take into account Bitcoin and Ether. And I subtracted the USDC and Tether market cap to like get rid of stable coins. It does contain things like DAI, Frax, etc. But no chart is perfect, right? And then I divided the altcoin market cap excluding stablecoins, by the market cap of Ether. And you can kind of see this is like in this structural downtrend. Maybe this is like entering support. But you know, if you told me that this was a stock, right, I would never recommend this to like anyone, right? Maybe only to my enemies. So like maybe like it's set up to a bounce, but you know, like generally it's really, really hard to pick altcoins. Of course, like I'm like full-time in this space and I try to identify strong altcoins and whatever, but I've been wrong so many times. I've gone wrecked so many times. But you know, I do want to talk about it just because, hey, like I think people want me to talk about it, right? In terms of content and whatnot. And the one thing I've been talking about, I guess, is like perps coins, right? Feel free to tune out if you like don't care about this anymore, but I've been talking about GMX, and I've said that, hey, like I think we're near a trough in volatility. You know, I guess let's actually look at the fee dashboard actually. It always takes a long time for this thing to load. Yeah, so let's kind of look. So yeah, obviously like the recently like fees have gone like maybe not parabolic, but it's gone up. Volume has also gone up. And one of the reasons I wanted to like buy GMX was because it's like the number one leader in like the on-chain perp space. I guess like behind DYDX, but it's like the most crypto native. And I guess if you look at the overall trend, I still think that I showed this chart, right? The what is this? This is like not a pretty chart, and like if you think about like altcoins that can potentially outperform Ether, maybe it's literally altcoins that can offer like yield above that of the Ethereum staking rate. This is hopium, right? It's not like strong conviction. It's just like an idea, and maybe this isn't really like a reason people buy stuff. But GMX right now is like paying 12% in Ether, right? "Quote unquote" real yield. On Wednesday, these fees are going to update, and I believe that if you run the numbers, it's going to be closer to like 4.3%. So a significant decrease, but it's still above the Lido staking rate, which is like 3.9%. And as more and more Ether gets staked, the staking rate does go down, right, on average. So the bar to offer like a neat staking rate is going to lower over time. And I think GMX has a reasonable chance from now to end of year to just perpetually offer just higher staking rates that pay ETH over ETH. But obviously there's like concerns about securities, risks and whatnot. And even GLP is like paying like 48% paid in Ether, which is like pretty crazy due to like the liquidations I've talked about. The GLP market cap is trending higher, and I think it's reasonable to expect this to maybe hit all-time highs. Of course, when V2 launches, right? Like GLP is slowly going to be sunset. So I'm not like really painting like a bullish picture on this, but I still feel like when there's market uncertainty, people like to LP for tokens, right? Because it pays actual yield that's not being paid in the farm token, because people don't like that. I'll also talk about MUX, right? I talked about this protocol a month ago. The metrics seem to be pretty strong. They are a perps DEX aggregator, and I own some, right? Do your own research, but TVL also trending up, and I think as more and more of these perps like forks launch, I think there can actually be a market, like a literal product market fit for perp DEX aggregators. And DEX aggregators, like for like 1inch pair swap, their literal job is to save you money, so they can't charge you fees. But I think perp DEXes can charge fees because they have their own native LP pool, right? So any volume that routes through their own native LP goes to token holders. And also there's also that chance where if like MUX has like all these referral codes for all these perp DEXes, and can offer like lower fees like for like traders, and they can capture some of the rebate, and then like maybe some of that can go back to like token holders and stuff, then maybe like basically like the point is like I actually think that perp DEX aggregator tokens can actually have value accrual, whereas for DEX aggregators they cannot. But it's a working thesis. I'm not like fully convinced on this. This is also high risk. So yeah, I mean, it's just something to be considered about. And ultimately, right, like the Bitcoin dominance narrative is super strong. Like ETH BTC doesn't look that strong right now, right? I still think that ultimately, like we're gonna kind of be in this range, and like it doesn't make sense to be too bearish or too bullish. This ratio. I don't really expect the flipping to happen anytime soon, right? Like I don't really expect it to happen in like the next 3 to 4 years, and I also don't expect it to like go down here or something. But who knows, right? And this is it's not loading. yeah, so this is, the professor from NYU, right? The business professor. This is kind of boomerish, right? So like maybe this isn't like that important, but I do think it's kind of interesting to kind of think about crypto in this way. I think a lot of like short-term attention shifts towards the traders because traders can like post every day because there's a bunch of setups. But like if you're thinking like a longer term about crypto, it's like when gas fees are like this low, it's like, what do I even talk about, right? It's like sometimes I have trouble finding things to talk about. And then like if you're trying to be an investor, right, you have to have a longer term time horizon. You have to have a thesis, patience, immunity from peer pressure, and just like like literally stick to your guns. And of course, like be okay if you're wrong. Just constantly like test your theses. But it's like kind of like monitor, right, like your ideas. And generally, right, if you think about like I don't know, like crypto people that that you like look up to, that you think has made it. Like what % of them are like crypto investors and like what % of them are traders? I would bet you that like most of them are like investors, right? Because most gains are just like made like buying tokens that you like holding it for a longer term, and then like just compounding your gains up and up and up. Easier said than done, right? Like it's one of those things where like at the peak of the bull market, you look back to like people that bought coins in 2019, it's like, oh my god, like I wish I bought Ether in 2019 and held it until like 4K. It would have been so easy. But in reality, it's not easy at all. It's really, really hard, right? Like every week there's a FUD event. Every week there's like some exploit or something, right? Like it's like some damn hack. It's really hard to maintain your convictions. But I think at this point, right? Like you just have to believe in the tech, right? I mean, I believe in the tech. I think DeFi is one of the best. It has like one of the best product market fits when it comes to like distributed ledgers and like public blockchains. Of course, there's so much room, to be had there. But I think one, like thing that perp DEXes go to have. One thing that perp DEXes have against them is like the high fees, right? Because right now on GMX you have to pay 0.1% to open and close a position. Like to be honest, like I own the token, I farm GLP. But I don't really recommend people to trade on there. I mean, I guess I don't really recommend people to trade like in general on leverage. But people love the centralized exchange experience just because it's cheaper, it's faster, it's centralized, right? And like fees on chain are like much higher. But I think we're also starting to see this trend of, with the GMX V2 update, the fees are going to be lower, I think. I mean, it's not confirmed, but I think it's very likely. And even like other competitors like Quenta, they're going to lower their rates. And I think, Mux is also going to like lower their rates. There was like some proposal. So I think over time, right, perp DEXes, on-chain DEXes are becoming more and more competitive to centralized exchanges. And I don't really expect DEX volumes to flip CEX volumes anytime soon. But I do think that, as the tech improves, as the user experience, the interface improves, I think it makes sense to believe that the DEX to CEX volume ratio is going to be up only from here to, let's say, 2034. It's going to be like a slow process. It's not going to be something that, it's not like you can buy something and it goes up like 10x in like a week and then you're like retired. Yeah, I mean, definitely not. You kind of have to play the long game. And that's definitely like the mindset that I am in. Like, who knows, like maybe I'm coping because I own heavy bags. And I do own very heavy bags. But, I mean, that's just generally my views. So yeah, I'll wrap it up there. So hopefully, right, to wrap it up, Bitcoin goes up. Maybe that can lead, I have to realign this, but like roughly here, right? Like hopefully, like this leads to more on-chain activity because, like that creates more activity on-chain, which burns more Ether, creates more economic value for on-chain applications. So that's something I'm looking forward to. If this does not happen, then maybe, right, this is like just literal supporting evidence that I am wrong on my Bitcoin dominance idea and it's going to go like much higher. Who knows, right? Just monitor the data and we'll kind of see what happens there. So thank you guys for watching. See you guys in the next video. And yeah, like if you want more content, I post 3 videos a week, daily updates in the premium Discord. Link is in the description. Thank you guys for watching and see you guys later. Bye-bye.